All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Sorry, I know Stian is like, this guy never starts on time. I know he's thinking that. But you know what? I'm getting closer. Okay, I should just move the time another 5 minutes. Anyway, thank you all for joining me today. Let me just adjust this microphone. You guys should be able to hear me okay. I am streaming on YouTube, on Twitter, and on Rumble. I am no longer on TradingView because they've phased out their streaming, which is cool because now I can speak much more freely. Anyway, so thank you for joining me. So if you're new to this session, welcome. Let me explain how this works real quick. First, I'm going to go over the economic calendar. We have quite a few things this week to mention. Then we're going to talk about this Bitcoin chart that you could see on the screen here and what's happening. I wrote my TradingView article on Saturday about this situation, and I'll explain, we'll get into this detail here. And then if you stick around after that, I'm going to see if we can take some Bitcoin day trades on our new TradeScanner Pro script. Now, it's still not available yet, but I'm going to demonstrate it again. All right. And we're going to see if we can actually get some paper trades. I'll explain the whole situation, but there were some updates that we had to take care of before I submit it to TradingView for approval. So, now I've tested it, and Stian, it looks good. Like, I don't think there's anything else we have to do to this thing right now. So I'm going to submit it, but I want people to see. So today I will demonstrate the full version, the version that when it becomes available, you'll be able to access. All right. So stick around for that. That's going to be after the analysis. All right. Also, if you are interested in opening an account at a new exchange or trying something new, consider the links in the description, in my description. All right. There's Bybit and MEXC. Those are affiliate links. Stian gets a small cut of your trade commission when you place trades after you fund an account and place trades. And that goes a long way into helping him support the community. In case you haven't noticed, he's the one that helped me build this script, okay? Because I'm not a coder. I have no idea where to even begin as far as how to build a program, okay? So he put it together, painstakingly put this thing together, and it works very nicely. It's very interesting. So you guys are going to see that. So support him. Open up an account. Place some trades. All right. Anyway, and if you're interested in the community, we have the free community. The link is in the description, and check out the website, marketsignalspro.com, because when the script is available, that's where you're going to have to go to sign up for it. All right. Anyway. All right. So let's get into this. Also, if you want to share what city or what country you are from, that's always a fun fact. I'm streaming from New York City, also known as, I'm the New York City, the greater New York City area. I'm not in New York City. I'm outside of the city. All right. And it's better to be outside of the city these days. Also known as Northern New Jersey. All right. So with all that, let's get this going here. Let me pull up my special slide. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Now, so hello to my regulars, right? Stian, we got James, Will, good to see you. Okay, hey Tillin, can you comment on BTC on a larger time frame? Well, we could take a look at like a weekly, which should cover your question. Yeah, Giovanni. From Mexico, mucho gusto, bienvenido. All right, no more bad Spanish for today. Hey Alex, all right, good to see you guys. Okay, oh, we got Stian in here twice, unless that's a guy who's scamming Stian. No, I'm joking. That's Stian. All right, cool. So, all right, guys. So let's first talk about, you know, I have like a Spanish sentence that I prepare for people. I'll try to say it real quick. So, puedo hablar solamente palabras malas. Palabras malas. That's all I can do. I can only say the bad words. All right. Anyway, so let's get into the economic calendar first. You should always open up an economic calendar. TradingView has one. It doesn't matter where you open it, but you should open one somewhere. Okay. You want to be aware of what's going on this week in terms of economic events. That's very important, especially if you trade intraday, like I'm going to show you once we finish with the Bitcoin analysis here. All right. You don't want to get caught in the middle of any of these reports. They can come out of nowhere and they could be a surprise and they can cause a large move that just comes out of nowhere randomly. Right. So today is Monday, the 8th. Well, tomorrow is Tuesday. And what do we have tomorrow? We have the CPI report, okay, which is what the consumer price index. And that one does not account for food and energy. So that is actually the more important one. There's the CPI, and I believe there's a PPI report, or that one may be on Thursday. But the CPI that comes out tomorrow for the US is important. That's a market mover. I believe that number comes out at 8:30 a.m. Eastern time. By the way, Steen mentioned the eclipse. I don't know. I haven't seen anything today. So I don't know what's going on with that. Maybe they canceled it. All right, anyway, I forgot to mention that. So, so CPI report tomorrow. Also, tomorrow we have, I believe it's the Bank of Canada with their rate announcement. All right, you might want to double check on that. I believe it's tomorrow or it's possibly Wednesday, but I know the Bank of Canada this week has their rate announcement. I don't expect that to be a major global market mover, but if you're involved in maybe stocks in Canada, or if you have, the CAD pair or something, it can have an effect. So just be aware of it if you're, in that part of the world. On Wednesday, we have the FOMC meeting minutes. That's usually not a big deal, but it can have an effect intraday. That usually comes out at 2 p.m. Eastern time. 2 p.m. Eastern time. So you want to be aware of that, all right? Especially if you day trade, especially if you're involved in like futures and stuff like that, because it can jar the market a bit. It's nothing big, but it can cause a little action. So be aware, all right? On Thursday, we have, what is it? I think it's the European Central Bank. They have their rate announcement. So there's a lot going on this week. European Central Bank with their rate announcement. And also on Thursday, there's another CPI and a PPI report. But these reports exclude food and energy. So they're not going to be as important, but they may have an effect. Be aware of that. And then on Friday, we have Michigan consumer sentiment. Okay, so there's kind of a lot going on this week. There's a number of things coming out which can cause movements or surprises or things like that. So just be aware. Make sure you double check that calendar. All right, Christo says CPI report is on Wednesday and Canada and minutes. Oh, CPI is on Wednesday, Christos? I thought it was tomorrow. Are you sure the U.S. one? I'm talking about the U.S. one because I saw there was I think I saw there was another CPI report. That's why I ask you guys double check the calendar because I try to memorize this stuff. I don't always memorize it correctly. Okay. Okay, cool. So the CPI report is on Wednesday. Okay. And Canada and minutes. Okay. So that's when so it's not tomorrow. I thought it was tomorrow. I thought CPIs came normally out on Tuesdays. All right. So Wednesday at 8:30 a.m. Eastern time. Again, double check the calendar. Hey, we have another guy from Romania. Welcome. We have Greece in the house. Okay, cool. I used to be very famous in Romania. Just ask Alex. Ask Alex how famous I used to be in Romania. I love Romania. All right. Aries, you're from Romania also? Oh, okay. I'm going to be competing with the Tate brothers soon. All right, anyway. Okay, cool. All right, so that's the economic calendar. You guys cool on that? So make sure you guys just have a good grasp on that. Oh yeah, Steen, by the way, if you could just keep an eye on Rumble for me, if possible. See if there's, because I can't see what's going on. People, if you're watching me on Rumble, I can't see the text there. I can't see the messages because this platform doesn't integrate with Rumble. So I don't see the messages if anyone's writing me a message. Just wanted to mention that. Okay, from Brooklyn, we got Savi from Brooklyn. How you doing, Savi? I know you don't talk like that, but people in Brooklyn used to talk like that at one time. Anyway, good to see you. All right, long time no see. Okay, from Brooklyn. Where's my Jersey guy? I had a Jersey guy here like a week ago. He was like, all right, screw this guy. My Jersey guy quit. All right, I'm from Romania, but I live in Spain. Oh, Romanian guy in Spain. Spain. I haven't been to Spain, but I hear it's nice. Okay, anyway. All right, cool, guys. Cool. So if you have any questions, just feel free to share them in the chat. We're going to get into the chart now. Okay. So if you have any questions about the economic calendar, just ask, but that pretty much is straightforward. I covered all the main things. And Christos, thank you for correcting me. All that main stuff starts on Wednesday. I thought there was something on Tuesday, but I guess I saw something else. I don't know. All right. But we do have ECB this week. We do have Canada this week. And I'd say the heaviest report is the CPI, the first one, the first CPI report. That's usually the most important. All right. Let me make this chart bigger because you guys don't need to see my pretty face. All right. There we go. All right. So in my TradingView article that I published on Saturday, I highlighted this range, right? This consolidation, this triangle, which you can clearly see on the chart, right? And my scenario that I suspected was we stay inside the triangle, right? Because you have to understand in terms of wave counts, I have not put the other wave counts in here because I wanted to see how this played out. It's possible to have what are called you can have a motive wave that's not an impulse wave, right? And it's just 5 legs. And when it's not an impulse wave, you basically get like the 5 legs going into a triangle, basically, right? But we don't so this could be C over here, this could be D, and we could have an E possibly, but we have to see how this finishes out here. Okay, that's why you don't get married to the waves. You use them as a general guide, and then the market needs to confirm them. If the market does not confirm, then you have to adjust. So, like, again, just an important point that I always make when I do my analysis and I write my analysis and stuff like that is our goal here is not to tell the future. Our goal here is to get a sense of what is probable, and then we have to prepare for the market to confirm or not. If the market does not confirm, then we adjust. It's our job to adjust, not the market. Right? The market knows everything. The market does whatever it wants, whenever it wants, and it can defy logic. It can do whatever it wants. It's our job to use the information that's available to get a sense of what is more probable. And more importantly, because I know everyone wants to be right, and I understand that, but more importantly, we want to know the risk. Because you can be right, but if you take a big risk, then it doesn't matter. You want to know why? Because when you are wrong, you will wipe out any profits you make anyway. So this game is more about risk than it is about being right. All right. So I know that may be counterintuitive for some people because I'm like, oh, I want to be right. I want to be right 100% of the time. That's not possible. We're playing a random game most of the time. Okay. Especially on smaller time frames, as you will see when I demonstrate the script momentarily. Now, so let's get into this here and let's talk about what's going on. We have this breakout. It looks to me like a breakout, but this candle isn't closed yet, right? We pretty much have pushed through this resistance zone, and looks like we're going to test the all-time high. Now we have the halving coming up in what, a week or two? I think it was the 19th. I think someone told me it's the 19th. So we still have some time. I suspect we're just going to gyrate in this range because I'm a believer that it's buy the rumor, sell the news. Now, I could be wrong, okay? But as long as we stay in this vicinity, right? We have this basically, we popped through, but if the next candle is bearish on this time frame, if we get something like that, especially if it's a pin bar, okay? If we get something like this, let me see if I can do a little pin, right? If we get like a pin bar situation in the next candle, here, I'll move it over like that so it makes more sense. See, we get like a pin bar like this, then that is not exactly a range breakout. That's a fake out. All right. And fake outs in this entire zone from here up to this rectangle I have up here, fake outs are highly likely. Now, I will always say that when we test highs. Now, it's always possible that we can break out and keep going as well. That's a possibility. But just look at the resistance, right? We have this area right here, which is fooling around. And as you can see, it's hesitating a bit right now as we speak. We see a little tail on this candle. All right. And then we have this fake out zone up here. So there's a lot of resistance in front of it. It's going to take a pretty serious catalyst to get this thing through this. So if this thing is just going to gyrate around and we don't have any serious catalyst, I suspect we're just going to go back inside the range. Okay. And the first place that we could possibly test is the midpoint of the range, because when markets are range bound, they tend to gyrate around some sort of average price. Okay. That is usually the midpoint. All right, so the midpoint in this range right here is around 68.5. It's around this area right here, right? This is like the midpoint area right there. So if we're going to pull back, that's a good place to measure potential from, especially if you're going to day trade or swing trade short for those that are aggressive counter trend traders. Now, the general trend here is bullish, and there's no question about that. And we're just consolidating right now. There's nothing bearish about this. It's possible that we can break out and push higher if we see a push. Now, so that was the fake out scenario, right? If we fake out right away. If we don't see a fake out and we see something like that, it's going to get a lot of people excited. You're going to see a lot of hype. You're going to see all the guys coming out again. You know, you're going to be a billionaire tomorrow. You're going to see that. Usually the people that follow me know better. So I hope you all know better not to consume that nonsense. If we get into this situation, again, I will be looking for bearish reversals. Okay. So am I shorting that? No, I'm not shorting that. If I was dealing with the futures, I would be open to taking a day trade short, maybe a swing trade, but a very low expectation swing trade. Meaning, if I managed to get short, which is not something I'm really looking to do, but if I managed to get short, the most I'd be looking for is the retrace back to the midpoint of the range. Okay, that would be the most. I would not be expecting, oh, Bitcoin in a bear market. That we're a long ways from that. Okay, we need to break some serious supports to even think that. So right now, what we're looking for are supports to generally hold and resistances to break, except when we're starting to push areas like this. So here's the key point. You don't want to be aggressively long here. You don't want to be aggressively long here. Okay? If you're long now and you get to these levels, then those are good places to take money off the table. If there are some day trade opportunities, which are very possible, maybe we'll find one today. Day trade opportunities are perfectly acceptable going into this area. I mean, this move, what's the high today? 72,756. This is like the 73 to 76 area up in here. So you're looking at another 3,000 points. Plenty of room for day trades, right? So day trades are always appropriate because you can manage your risk very easily. The risk is very small, right? If you respect the stops, of course. If you don't respect the stops and you get long up here on a day trade and you say, oh, it'll come back, you're exposing yourself to all of this risk, okay? That's something you need to avoid, right? We want to look at this game in terms of risk. So these current levels, right, again, are good for the short term. These are not good for bigger picture type of trades. I know everyone's saying, we're going to break out. We're going to go to 100K. You have to stop getting sucked into that because there's no way to know. Maybe we do that. Maybe we don't. Okay. All I know is when I see highs, I become very risk adverse. All right. When we're pushing highs, I'm interested in support levels. I'm interested in pullbacks. Okay. In a bullish market, I'm interested in these areas right here. That's where our probability is going to be much more favorable. Right? And our risk is going to be lower as far as going long. We could still be wrong. It could still break. And then we have this support over here. I'm expecting if we test this support, I'm anticipating at least we get a good reversal there, right? For at least one attempt back to the high, something like that. Okay. So the levels are key when you're trying to evaluate scenarios and figuring out what you're trying to do during the week. So again, we're fooling around. We're flirting with resistances. Keep longs and shorts as day trades, right? Because this thing can turn very easily either way. In fact, earlier today, I'm just going to show you a 4-hour chart real quick. Earlier today, I sent a message out to my members, and I pointed out this candle right here on the 4-hour chart. And so we closed we closed bearish. The low at the time, I think the low at the time was 68.5. No, that can't be. That must have been this candle here. 70,000. I put the price in there. Maybe, no, you know what? Hold on a second. That was over here, I think. Was that over here? I don't remember. But I shared, this is a 4-hour, so it had to be around here. I must have misread the price. But the low of this candle, 71.2, is the low of the candle. Okay? So yeah, I probably put the wrong price in there. Now that I'm seeing this, I was probably looking at this price. but that certainly wasn't it earlier today. 4 hours. Well, let's see. 4 hours. Actually, maybe it was. No. 4 hours ago, that was 12 o'clock. I sent it around 9. That could have been this candle here. Anyway, the point is this. You have a bearish close. You want to look at the low of that candle, 71.2 or 71.250, right? You can even round that to 71 even. If it takes out that low, you have a swing trade idea, at least an aggressive one, short in play at that point. Because this area up here, that area is a smaller reversal zone. I don't have it marked on the chart because the chart gets too messy if I draw all of them. So I like to keep the bigger ones on the chart. But if I was looking at this intraday, I would have this zone highlighted here, and it would probably look something like this, okay? And if the reversal occurs in there, if you're thinking of shorting, that's the place to do it, all right? Now, I mentioned that for only aggressive traders. I'm not a big fan of doing stuff like that, especially in markets that are pretty strong. Does that make sense, you guys? So let's go back to the daily chart. Now, I saw a question before about the bigger picture. Let me go back and see people's questions here. So I saw a question from Tillin, right? All right, Tillin, I'll get to that. Let's see what else we have here. Alex, do you see a rotation from the 5 big S&P companies to energy and mining? That's a good question. Well, let's take a look at the S&P. Let's see what else we got. Okay, everyone is talking about Bitcoin, but ETH is the bigger play. So should check ETH BTC. Okay, we could take a look at that. All right, so let me go through Tillin's question first here. He wanted to talk about the bigger picture. All right, so let's go to the weekly chart. Okay, now this is the weekly chart. And we could pretty much gather when you're looking at bigger picture, the weekly is appropriate. You don't really need to go to the monthly. You really don't need to. You could just zoom this thing backward and you pretty much see the same thing. Now, this chart, I have all kinds of stuff marked up on this chart here. So what I should do is I should go to another Bitcoin so we can see a clean chart. All right. So let's go to like Coinbase, right? Coinbase is clean. So here's the Coinbase chart on the weekly. Now, what are we really looking at here? Well, for one, we're looking at these old highs, which were above, and it seems that we basically, that resistance seems to be supportive right now, okay? The candle action up in here, though, is starting to get hesitant over the previous weeks. You see that? That's typically a topping sign, all right? When it starts to hesitate a bit, and then it tries to push a little further. Situations like this, a lot of times, you may get the breakout, and then it fails. Because whoever is actually getting out is actually getting out, and people step in front of it because they insist. They jump into this thing, and then they get caught up here, and then there's no one left to buy, right? That's the analogy. Now, here's the thing about that. I could be wrong, and maybe we continue higher, but this zone right here, this is zone, and it goes up to 83K. It's something like this. I measured this previously. The zone is like that big. It's something like that, and we're inside of it, okay? So this goes all the way up to 83K. See that? Which means this thing can work its way up into this area before it turns. Now, I know people may say, well, you're always talking about it turns, and it never turns. Well, that's unusual, okay? This type of move is an outlier, and nothing moves in a straight line. Markets cycle. So most likely we're near a top of a cycle, and when this thing turns and we go into an actual bearish cycle, you're going to be sorry if you bought it up in this area because the risk is the greatest. That's all I'm trying to point out. After everything is said and done, it's really about your risk appetite that determines how you manage these situations, okay? If you don't like to take big risks, then no matter what happens in this area, it's not a good idea to go long and hold on as an investment, for example, because your risk is the greatest. If you like to be risk adverse, then you should be waiting for better levels. And we don't even have a bearish cycle. If you're more aggressive, or maybe you say, you know what, I don't want to take that bigger risk as an investor, but I don't mind as a swing trader, okay, then you just have to find your entry points, and you have this area here to play with. But if you think this thing is going to go straight to 100K, then you're just, you're a dreamer like everyone else. Like, again, it can happen, but I don't like to base ideas or take risks based on dreams that people like to just share for attention. I like to look at price history. I like to look at levels, and I like to determine my risk at those levels. And then I can decide, do I want to take this risk or not? As an investor, I do not like to buy highs. Okay. I like lows. I like things that look ugly, right? We never get a pullback here. So at some point we will, and it'll probably pull back more than people expect. When will that happen? Who knows? All right. But does that make sense? So keeping an eye on the bigger picture like this is important, because you want to be aware of these levels. Right now, there's no sell signal here yet, but in a couple of weeks, there may be one. And we have this entire range up to 83K where something like that can develop. And it's going to suck in a lot of people who are convinced this thing is going to 100K. All right. I'd prefer to see a pullback first or something. That's going to be, if we do get an extension like that, it's going to be a very risky move. So unless you're buying it and then you're looking to sell it right away, you get my point, right? I don't have to keep repeating that word risk. Okay, so hey Milad, how are you? Good to see you. All right, you found me over here. Yeah, TradingView phased out their they no longer have streaming over there, as you probably figured out. Okay, so Tillin, I hope that answers your question. Now, Alex asks here about the S&P. So real quick, let's go to the S&P. I'm going to go back to the daily chart, right? And stick around, people, because I'm going to do the trade scanner next. And we have the full version. Just if you missed the beginning of the stream, I have the full version of the Trade Scanner Pro available now. It's available to me, right? Stian has it, but no one else. It's not available to anyone else yet, right? Because he basically had he had finished the updates. I tested it, and I like it. Okay, I think it's at 100% now. So I can now submit it, but I'm going to show you guys how it works. It's really cool. Okay. So just stick around for that. So S&P, let's take a look, right? So we're going to go to SPX, USD, and Alex asks, do I think there's sector rotation? Well, I don't know. You know what? That's a tough question to answer from looking at the chart. Just look at this thing. There's no real pullback here. Let's go to the weekly. There's hardly, we had, let's go to the weekly. Look at this. This is the S&P. I mean, it's nonsensical, right? To have it just go like vertical like this for weeks and weeks and weeks and weeks and weeks, and there's no real pullback. I mean, look how many weeks go by to get one bearish week. We don't even get like a bearish week. We get like barely little blips, right? So I believe that this is a function of inflation and the weakening of the dollar. That's what I believe this has to do with, rather than economic expansion, and all kinds of other engineered ways to just make this thing do this, like that, act like this. This is unusual behavior. That's all I can say. Now, with that, I don't want to get in its way, but to answer your question, do I think that sector rotation? You're rotating out of this to get into like energy. I mean, let's take a quick look at oil and compare. What does oil look like? USD WTI. USD. But they changed the symbol on oil? No. Okay, there we go. USD WTI, right? This is the weekly. I mean, the S&P is not even pulling back. Hardly. And this is like a little bit of a bullish movement on this thing. I don't know how to answer that question really. Like, we have a support area right there. We had like a high. I mean, if there was sector rotation, maybe this is when it was occurring, but I don't know. This doesn't look like sector rotation to me now. Maybe if we retest the low, I don't know. But the S&P is not pulling back. So who's rotating anything? I mean, the S&P doesn't even show sell signals. So I don't know. I don't know how to answer that question. I personally wouldn't get mixed up with those opinions. Maybe if there was some other way to measure it economically, but I'm just looking at like levels. I look at trend, structure, things like that. And I mean, here you're fooling around near a resistance. Maybe it breaks out. maybe it just consolidates and tests the low. If I was going to go long energy or oil or something like that, I'd at least want to see some sort of retest of that level, at least close to it. You know, something higher low, something. Okay. Opinion of Ethereum. Okay, good question. All right, so I hope that answers your question. I could take a look at Ethereum real quick, but I want to get into how we're doing. Okay, I got a little time. I'll do Ethereum real quick, and then we're going to take a look at the trade scanner. All right, Ethereum, ETH. Okay, actually, you know what? I have one we can pull up over here. Let me see on my list. Here, we can pull up this one. So here's Ethereum right here. Now look, Ethereum typically follows Bitcoin. Okay, this is Ethereum on the weekly. We go to the daily. It doesn't follow it exactly, but typically it follows, right? So, I mean, look at this situation. Bitcoin's been consolidating a bit. Ethereum has also been consolidating a bit, right? I can even draw that triangle formation very similar to Bitcoin here. So everything that I said about Bitcoin from a technical perspective pretty much applies here. You know, you're fooling around again at a resistance area where a reversal, a fake out is very likely to occur. Now, at this moment, there's nothing there. There's no bearish pin bar. We don't even have a bearish candle. There's just nothing there. But over the next couple of days in this area, I'd be looking for such a formation. If price blows through, which means Bitcoin would also have to do the same thing, I'd be looking for that type of action in this area because that's the high there. Okay. So you use when dealing with Ethereum, really you should use Bitcoin as your guide. Does that make sense? Bitcoin really should be like your overall guide because they follow each other pretty closely. All right. And that's how I would choose. I would not be buying this breakout. That's for sure. This is a consolidation. And a lot of people are going to be buying it because Ethereum's going to go to 10,000 now. And then you watch it retest this level here. I'm not saying it will, but that's the area right there that has the greater probability for longs, not this current area. It could break out, like I said, but any little thing goes wrong here, you're at a resistance. You're at a midpoint resistance. I mean, you're right in the middle of this area. I mean, look where you are. So high risk for bigger picture longs, like swing trade long, but day trades, you can day trade at any level. Does that make sense? All right. So I hope that answers your question. That was Ethereum. Again, for those of you that may be new to the stream, I'm looking at this from a very short-term perspective. My time horizon here is basically like a few days out to perhaps a week out. So if you're like an investor, my streams aren't going to be very useful to you. Okay. These are more for like day traders and short-term oriented participants. All right, let's go back to Bitcoin. Okay, actually, so I'm going to go to BTC perp. Okay, that's the perpetual futures contract. And we can take a look here at, let's see, which one? We'll use MEXC, all right, just because I'm not using them for any particular reason. We'll just use MEXC because it's a clean chart. All right, but Stian does have an affiliate link with MEXC, and it's in the description if you want to check that out. All right, so here's MEXC. This is the Bitcoin perpetual futures. Now, we're going to go to, actually, this is the wrong chart. Let's go here. Okay, now this right here, I'm going to change that again. So BTC perp, this is where the script is. All right, we're going to go back to MEXC. So here's MEXC, right? Exchange. This is Bitcoin perpetual futures. And I'm going to go to a 1 minute. Let's open that up. Now, a 1 minute chart, you may think that this is really fast, right? So, all right, let me just make an introduction here first, actually, before I get into this. The trade scanner. If you're not familiar with the trade scanner, it's my bot that we have on the Market Signals Pro website. And the trade scanner sends out signals by email. I'm going to refer to that as Trade Scanner Classic, okay? It finds a signal based on the trend, and it sends out an email. And it sent out a few, it's been pretty busy these previous couple of days, and it sends out signals, right, by email. Now, Over time, I gathered feedback from people, and people said, yeah, it's cool and everything, but it's not convenient enough for me. Okay, so we developed a script. We took that formula and we converted it to a script that can be used on TradingView. So now let me explain real quick. Let me give you an idea of what the trade scanner does exactly. All right, so let me pull up something I can draw with here. All right, so as you know, the trade scanner is a bot, and it's a trend following momentum reversal system. I want to explain how that works so you understand the concept. So it works in 3 steps, right? The first step is it looks to identify a trend, right? So it's either bullish or bearish, or it could be conflicted, but that's usually what you see on the chart here, up here. If you see in the corner here on the chart where my arrow is, it says trend bearish, okay? So it first identifies the trend. The second thing it does is it's looking at the price action basically, right? And it's looking for, if the trend is bullish, okay, it's looking for a pullback, okay? And then once it identifies a pullback, the pullback has to pull back a certain amount. Once it does that, the third step is the trade scanner looks for an exhaustion of momentum, and it looks for a turn. So that's a momentum reversal, right? And usually the turn looks something like this. And that is where it calls the signal, typically. Now, when a signal appears with the Trade Scanner Pro, it places the order suggestions on your chart. Okay, so basically what it's aiming for is a continuation of the trend, right? That's what it's aiming for. And it's all based on price momentum. So it can be used on any time frame, any market, that as long as there's momentum and volume. If you try to use this on a slow market, it's going to be problematic. Okay, does that make sense? So that's the concept behind the trade scanner. Now, I have this 1 minute chart, like, all right, well, there's nothing on the chart. It's empty. Okay, because there are no signals, right? I see a lot of these vendors that give you these tools to work with, and there's all kinds of garbage on your chart, which basically provokes you to take trades and make stuff up. A common mistake that I see is people will try to squeeze the markets, their time or their schedule into the market schedule, meaning they say, okay, I have a free hour right now, and I'm going to try to make this much money in this hour. But basically what you're doing is you're trying to squeeze your agenda into the market's agenda, right? And the market doesn't care about you and your schedule. The market is going to do things on its own schedule. So you have to adjust to that. Now, one great feature about the Trade Scanner Pro is, do you have to sit here on this 1 minute chart and wait an hour for a signal to show up on this 1 minute chart? It could take an hour. It could take 30 minutes. I'm not going to sit here and wait. We're going to actually look at a smaller time frame. But what you can do is you could set up this, okay? And basically, you can set up a notification from TradingView and say, when a signal appears, let me know. So if you have the TradingView app, it'll pop up on your phone. Okay, if you have a tablet, it'll pop up. If you have it on your desktop, wherever, TradingView will give you the notification. Now, if you have the free version of TradingView, you can set up at least one notification. Okay, one. If you have a paid version, you can set up more notifications. All right, so I'm not going to sit here and wait for this thing to give me a signal. What I'm going to do is I'm going to go to a 15-second chart. 15 seconds. Free members of the free TradingView don't get time frames below 1 minute. Now, I do not recommend using this on a 15-second chart. I'm showing you a 15-second chart because I want to demonstrate a signal as it appears, right? So let's pull up my trade panel here. Okay, and we're going to see, I'm going to take a paper trade. Now, right now, we are in trend mode. Okay, now if I look at my settings on this thing, you'll notice we have a few features here, right? We have heads up, we have trailing stop, we have counter trend, and then we have show trend. Show trend, it shows this little trend label up here. Okay, if I put counter trend on, now it's only going to look at counter trend trades, which means it's going to go against the trend, and it's going to look for like something like this. There's a signal. Okay, actually, is that counter trend? The trend is bearish, right? So this is a counter trend signal. I'm going to take this with 2 lots. Okay, I want. Let's see what happens. So I just got long, okay, 2 lots on this counter trend signal. Now you can see the stop is very tight. This is a 15-second stop, a 15-second chart. Chances are this can get stopped out very easily. And it says counter trend because this trend turned bearish on this time frame. On the 1 minute, it wasn't bearish, okay? Or maybe it was, but each time frame is going to have its own trend. That's important to understand. That's why this thing tells you. Now, I'm in counter trend mode. So you can see here, it says counter trend mode on or counter trend active. So you know you're looking for counter trend trades, right? So as you can see, the trade was laid out for you. The blue is the entry, the red is the stop, and the green is the take profit. Now watch this. I go back to my settings, right? And I can put the trailing stop on. Now what is that? The trailing stop shows you how to manage the trade, or basically if you have a runner, the trailing stop will keep you in the trade. So for example, if this trade happens to go above the take profit, okay, and I don't want to sell it all, right, because I have 2 lots, I can choose to sell one there. Because again, you have to place the orders, right? These are suggested orders. You have to place the orders. And if you say, okay, I'll sell one at the take profit, and then I'll ride the other one and see how far it goes. I was playing with this yesterday, Stian, on this time frame, and I had an 8-to-1. I had an 8-to-1 trade, okay, on this time frame. So I was like risking 50 points, and I captured 8 times that. It was something ridiculous like that because I had just let it go until the trailing stop got reached. Here's the trailing stop. You see it? It's this yellow order right here. So what this does is this reduces your risk right from the start. The risk is now reduced on this trade by this much. You see that? So it may go to the stop, but I'm not taking a full stop now. It's less. And as each candle advances, the trailing stop will move. See, now this thing is going the wrong way on me. All right. It's back to break even. I may just blow it out, or maybe I'll just let it go to the trailing stop so you can see what happens. All right. But at this point, I would probably just get out of it because I don't like the way this looks. But all right, let's just leave it up to the orders here. Now, one thing I have to say as we watch this is you must at all times respect the stop. I cannot emphasize that enough. Okay. Stian says, yeah. So here we go. So we just went below my entry. Now, if we go to the trailing stop, I'm going to blow it out. Okay. I'm just going to place a market order and get out. You must respect the stops, especially like on a small time frame like this, because this stop, if I don't respect the stop and I just say, yeah, I'll just give it a chance. It goes below here. I'll just give it a chance. You realize you saw where we were on the Bitcoin bigger picture, right? If this thing decides to pull back to 65K, I'm losing thousands of points simply because I failed to respect the stop. You must, when you're using a tool like this, you must respect the stop at all costs. You must respect the stop because this is a momentum-based system. And if there's no momentum, you may be caught at a really bad price, especially on smaller timeframes. I can't repeat that enough times. Okay, so if this trailing stop gets touched, these orders will vanish. Now, keep in mind, this is a counter trend trade. This was not a with the trend trade. Okay, I got long while this thing says bearish. So looks like we're going to touch that trailing stop, and I'm going to blow it out as soon as it touches it. Okay, it hasn't touched it yet, but you notice something though. I may be taking a loss here, right? But it's not the full loss. It's only this section. You see that? So I just cut my loss in half. I'm not out yet, but that's the advantage to using something like this. Now, this thing may not touch the trailing stop, and it may turn back around, and it may go this way. Cool. But I'm letting the market tell me what to do. I'm not reacting. You notice? I'm just letting the orders either get touched or they don't. This trailing stop is very likely to get touched because on this time frame, this thing can easily produce a red candle, a large red candle very quickly. So far, I'm still in it. You guys see how this trailing stop works? How cool is that? So either way, my stop has been reduced. My risk has been reduced as long as I respect the stop. You guys like this thing? So again, it's not available yet. We still have to get it, approved and all that stuff. But when it's available, you guys will be able to subscribe to this and use this on your trading view charts. So again, let's see how this thing goes. I may just blow out of it because I want to take a trend signal. This is a counter trend signal. All right, if I remove counter trend from my chart, this will go away. All right, counter trend, take it off, it's gone. See that? The trade is still open though. If I put this back on, oh look, we're gonna go, look at that. This thing almost got stopped out. Again, we're on a 15-second chart. So I know it looks very dramatic. It's a 15-second chart. Now, I'm going to try to give this thing a chance, and either we're going to get tapped out on the trailing stop, or we're going to push this take profit. If we push the take profit, I'm going to sell one lot. What's my P&L? Okay, $63. It's on paper, by the way. Okay, just to be clear, this is not real money. But I mean, for this time of day, it's almost 4 o'clock in the afternoon. This is a really bad time to trade, typically. Look at this. All right, so maybe we go for the take profit. So do you guys see how this lays out the orders? This removes the guesswork. This reduces the burden of analysis. You don't have to sit there and wonder, what do I do? Now look at this. We're almost at break even here. We're almost there. So if the trailing stop goes above that blue line, this essentially becomes a risk-free trade. And you don't have to sit there and wonder or guess. It's all laid out for you. Okay? And this is an aggressive counter trend trade, and it happens to be working out. They all don't work out this way. Okay? So look, this is now a risk-free trade. If this thing goes straight back to here, and it still can, I get out and I don't lose anything. Okay? I'll probably, if it goes all the way back there, I'll probably blow it out just before, just so that, see what I mean? See what I mean? I'm gonna let it go right to the trailing stop, and then I'll blow it out. There it goes, out. Okay, so I'm out of this thing. Now this thing should disappear, right? The trade should vanish. See? You see how that worked? It almost went to the take profit and turned right around. But that was a risk-free trade. Like I got out for basically break even. So why wouldn't you take your profit? I was trying to give it a chance. Now let me show you something else really cool. We'll switch back to trend mode now. Okay, remember that was counter trend. That was a highly aggressive trade to begin with. So this right here, this is a trend trade that's still in play, I guess. And the trailing stop has gone beyond. See, this obviously must have been in play for a little while. So I guess if I take the trailing stop off, that trade will go away. Right? Because either what will make these lines go away is it needs to touch the trailing stop. Maybe it'll touch it on the next move here. But let me just show you that as an example. I wasn't in this, obviously, but the trade was called here as a short. Okay? And it fooled around for some time around the take profit, and it went below the take profit. And look at where the trailing stop is. So that trade right there is greater than a 1-to-1 reward, a 1.5-to-1 reward risk, because the take profits are automatically set at 1.5-to-1 reward risk. Right? Now I'm going to take this off the chart because I don't want people to be confused. See, if I take the trailing stop off, it goes away. I'd like that trade to go away so I can show another example. But we're back in trend mode here, right? Now let me show you something. I don't have to have a 1.5-to-1 reward risk if I don't want. That's the standard setting. And that's how TradeScanner Classic works, right? If you want to do your own reward risk, you can just change it right here. You see that? It says reward ratio because the risk is always set to 1. So you can change the reward ratio. So let's say you want to do only 1-to-1. You don't want to do 1.5-to-1. So now when this thing calls orders, right, it's going to put them at a 1-to-1 ratio. Maybe you want to do 2-to-1. Maybe you want to do 3-to-1. Okay. You decide what you want to do, and you just change that input right there, and then it will change the orders, right? It will. So if you want to try to capture a 2-to-1, like let's say, for example, you're looking for a long. All right. I'm going to go to a 30-second chart. Let's look around. Let's say you're looking for a long and you expect a new high, and you say, you know what? I think I can get more than 1.5-to-1 reward risk. So I'm going to put a 3-to-1 reward risk, just to see if I can get that, and then it'll place the orders there. Okay, so when you guys have access to this, you guys will be able to play with it yourself. And you guys will see what I'm talking about. All right, there's nothing here. I'm going to have to use counter trend because that's the only way I can really demonstrate trades. I missed the trend trade. Let's see if there's a counter trend trade developing. Okay, let me show you this. Let me show you the heads up. You see where it says heads up? So I'm now in counter trend mode. Look at this. Look at these yellow candles, these orange candles. You see that? That's what I call a pre-signal. This basically tells you that a signal, in this case, a counter trend signal, is likely to develop in the next few candles. So this gives you a heads up or an early warning signal, right? So now you don't step in front of these. If you're extremely aggressive, you can. I mean, I'll just demonstrate that. I'll be very aggressive and I'll just take one lot, okay? So I'm trying to get long one lot here. I want one lot. Okay, I got one lot, and I took that on the pre-signal, which again, this thing can just keep going lower. It's extremely aggressive and not a good idea. But for example, see, kind of like that. But I'm going to hold it for a little bit. Let's see what happens. In these situations, right? If you get the pre-signal and it holds, that doesn't look good. We're going to get another pre-signal. Let's see if we get a second one. And again, I do not suggest you take trades on them. I'm just trying to show you, to kind of give you an example of, oh, look at that. There we go. Early. Now a signal is going to pop up next, right? And I'm going to buy a second one. The point that I was going to make was on the first one, even if I had to blow that out, I only had one contract. So my loss was going to just be smaller naturally because I only had one contract. I wasn't going to add to that contract, but now I'm going to add to it once I get the signal. There it is. I just bought a second one. Okay. Now let's put the trailing stop on. This is counter trend, by the way. Okay, so let's see where this goes. So I took my first lot. You saw I bought it early because I had the warning. Okay, I bought the second one when I got the signal. Now, if it goes to the take profit, I profit on two. If I was going to lose on that first one, I would only lose on one. Now, I could lose on both of them right now. This thing could go here. But the thing is, I'm in one from a decent price. So really, if I get blown out here, right, which it might do, if I get blown out there, you realize that I'm only losing on the second one that I bought. The first one is basically going to be break even because I bought it in this area. See that? So that's not looking good. I may have to blow this out. I'm going to have to blow out two. Let's see. But again, this is a 30-second chart. Okay, so these are sub 1 minute charts. They're going to be wild like this. All right, there we go, out. And I got long my first one around here, so I only lost that there. I was losing only on one basically. Okay, you see how that works? So I'm being aggressive. In reality, you shouldn't be this aggressive. Let's go back to let's take counter trend off. And let's leave the heads up on. So this trade is still in play. Obviously, there was a short called here on a 30-second. All right. Now look at this. Here's a perfect example of the trailing stop. Right, this thing went below its take profit. You see that? You say, well, how come we missed that? Well, because I wasn't on the trend time frame when this thing was called. Does that make sense? I don't want people to get confused here. So we're looking at you. Basically, you can have multiple trades going on at the same time. I would not suggest that. I'm just showing you counter trend trades because I want to show you trades. I want to show you what a trade looks like. This thing went below the take profit for this trade that was called here, and the trailing stop moved. It's almost at break even. If this thing continues to sell off, the trailing stop will then follow this thing below the take profit, and eventually the trailing stop will get touched. That is, especially with these coins, that is what can lead to a much greater reward risk ratio. See, look, I'm going to have to get out of it. I'm not even in this. Nothing to blow out. But you'll see this thing vanish if the trailing stop is touched. My point is, if you have a trade, right, and you normally get out for 1.5 to 1 or whatever, but the thing runs 8 to 1, this thing will keep you in it. And you can so over time, your reward risk will basically skew higher. And that's what increases your chances of being profitable. Okay? Not throwing around big positions and home runs and all the other nonsense that everyone promotes. This tool basically helps you keep your mindset in place. It reduces the confusion. It minimizes it basically simplifies your decision-making tree. And the orders are laid out. You just have to follow them. Okay? Any questions about this? Everyone's real quiet. What do you guys think? How many guys would sign up for this? I'm just curious. It's not available yet. So if it was available, I'd give you a link. There's no link. It's not available yet. But active investors will get this. If you are an active investor member, you don't have to pay extra for this. We're just going to send you the invite. Okay? If you're not an active investor member, then you're going to have to look at a subscription. So what do you guys think? Any feedback? Steen is the guy that built this thing, so he loves feedback. Any feedback for him? Anything you'd like to see better? Anything? Any improvements? Anything? I mean, I'm submitting what you see here is what I'm going to submit. So what you see here is what you're going to get. And then we're going to work on updates. But come on, how cool is that heads up thing? There's no heads up over here. Let's see if we could find some. Look, here's a golden candle. You see those golden candles? Those are heads up. They're just to give you an idea that a signal may be coming. Okay? There was none for here. There was no heads up. They don't always show up. But come on, people. You guys sleeping? What's going on here? How cool is this thing? Maybe it's not cool. Maybe you guys don't like it. What do you guys think? Now, again, I'm showing you this on sub 1 minute time frames. If you have the free version of TradingView, you won't even be able to look at these time frames, right? And I show you them because there's a lot of action and they're really wild. See, look, that's going to get tapped out. See that? So you should be out. That was a trade that had a reduced risk. Let's go to a 1 minute. There was a trade on the 1 minute too. That one's going to also get tapped out. Now, one feature that we're planning to build into this thing is a table. Now, this is going to take some time, but we're going to build a table, right? And the table will like show up like over here or something like that. And you'll be able to move the table around. And the table will allow you to input a number of markets, you know, like maybe Bitcoin, Ethereum, maybe you have a stock, you know, maybe you have a Forex pair, and you can put them in there and it'll tell you by time frame where the signals are appearing. So you don't have to sit here and stare at a chart. You could just watch your table and then something goes off. Oh, cool. And then you jump over to that chart. It would be cool to the horizontal lines at the candle, but leave them sitting on the chart for historical trades. That's interesting. Here's the thing with that. Steen suggested having historical trades available on the chart, but I don't want messy charts. That's one of the key features to something like this is clean charts, right? Because there's something going on here, right? As you can see, it's watching the trend, right? This thing's got the trailing stop on. I'll turn it off. But there are things going on. We have the heads up to see if we get a pre-signal. But I want clean charts because complicated charts. Now, if he can produce that in a clean way where it's not polluting the charts, then cool. But I don't like polluted charts. I don't like stuff like all over the place because it becomes confusing, and that kind of goes against the whole idea. My idea is to simplify the decision-making process and just help you just follow what's actually happening based on price action and momentum. So you're not sitting there chasing news. You're not sitting there saying, oh, this guy said this. You're not sitting there with your opinions. I mean, you could be, but the thing is, this kind of forces you to follow what the market is actually doing. Basically, it's doing what the market says. This thing is following momentum reversals. And also, another key aspect of this is you're using a system. You're basically forcing your decision-making. Here's a trade. I missed this one. It's going to go right to the take profit. I'll just let it go. This is a 15-second chart. You see that? Maybe we'll catch another one of these. I'll just leave this on. You're using a a system that takes the same trades for the same exact reasons every single time. That alone is going to be a huge improvement in your trades, because beginners especially don't take the same trade for the same reason every time. They take trades for a variety of reasons. They think they see this, they think they see that. They have a hunch over here. This is nonsense, a conspiracy theory. I'm going to go against, I'm going to fade this. Like, there's all kinds of nonsense reasons. And this thing basically helps you just toss all that aside and say, okay, these are the orders. That's it. Here's the buy, here's the take profit, here's where I should put my stop. It reduces, it just completely gets rid of all of that guesswork. And it allows you to see things in a more clear way. So clean charts are very important to me, right? That's why, like, the heads up, for example, are just little orange candles. Okay, heads up. Now, right now, look, the trend is bearish. So again, the trend is bearish on this time frame. No matter what it is on other time frames, I'm only concerned with this time frame. So even if the trend is bullish on the daily chart, on this 15-second chart, the trend is bearish. Okay, that is what the bot says. That is what the script says. So it kind of aligns your thinking with what's going on. Okay, what do we have here? All right, so basically I'm waiting for a short signal. All right, if the trend is bearish. Now, if I don't want to wait for a short signal, again, that's where I can go to counter trend mode, put counter trend mode on, and wait for a signal. Okay, let's see what we get. We had some warning up there. Let's see what we get here. Let's see if I get a counter trend signal. I'll probably get one. And then we'll call this a day. But I wanted to demonstrate some trades. Again, I'm showing you a ridiculously small time frame so that I can show you action. In reality, you should not be using a 15-second chart. Okay? In reality, you should be using really no lower than a 1 minute. You could use a 1 minute, 2 minute, 5 minute for day trades. And you simply set up the schedule, right? You set up the notification. You do this right here. You set this up, and then you walk away from the computer. So you don't have to be in front of the computer. You don't have to wait. You set up the notification. You get it on your phone or wherever you want to get it, because it comes from TradingView. It doesn't come from us. And then when a signal pops up, you know about it. And then wherever you are, whatever you're doing, you can stop for a moment, place the trade, and you're good to go. You don't have to sit in front of your computer. I'm a big believer in not sitting in front of the computer because it tempts you. You're going to take trades that you think you see. You're going to get caught in some noise. You're going to have to make the money back. Believe me, I've done that a lot. Okay. And it all begins with, I'm trying to make money in this fixed time frame. Like, I only have 2 hours. I need to make $100. Okay. And then you mess that up. And it's because you're trying to force yourself on the market. And the market, that usually doesn't mix well, because the market is random. It's highly random, especially on these time frames, right? And you have to respect that. The market does things on its own schedule, not on yours. So by respecting that, you set up your notification, and now you're aligned with the market. You're not sitting here struggling with it, being like, okay, what's it going to do next? How do I do this? Oh, I think I see something, right? It takes all that away, all that stress, all that anxiety. Oh, cool. Hey, Aries. All right. Nicolos, this is the best tool. Well, I appreciate that, Nicolos. It's good feedback. That's good feedback. Because again, I'm a day trader. I'm a swing trader, but my specialty is small time frames. So I understand all the things that go wrong, and I understand why they go wrong. Unlike these people out there, they make these tools. They're not even traders. They're just taking chart tools and they're automating certain things. And they're like, look at these fancy graphics. Aren't they cool? That's all you're looking at, right? With me, I want something that's functional, something I can use. This is based on a system that I use. It's not just some randomly slapped together thing that draws lines on a chart. Okay, so there's a lot of thought that went into why this thing should produce momentum-based signals, right? And that comes from my experience. That's not something that, you could be a really good programmer and in like 2 years figure out the market and then put something together. I have 25 years of experience. So I kind of understand how price action works, right? And it just took a long time for me to even come up with a system like this, because I had to do things wrong for over a decade. I spent over a decade losing money or just not getting anywhere because I refused to accept that markets are random. And once that sunk in, that's when I started to see things the right way. I wasn't profitable right away, but I started to understand what made sense, what kind of information I should be consuming, and how I should be making judgments rather than, using a moving average crossover, for example, okay, and trying to take trades with it, okay, or using like an RSI or something ridiculous like that. Those things have their purpose, but you have to understand exactly what they do, what they're measuring, and how they fit in, because alone they don't produce an advantage, right? To produce something like this, I had to use some conventional formulas, but they're used in such a way that they express what I'm looking for in the market exactly, right? That's how that works. So, like, for example, I possibly could have used an RSI, but I don't use the RSI, but I could have possibly, if it fit in, on an automated basis, right? That's where I think an oscillator has its most value, is when you automate. All right, now look, we got a little warning there. See that little green thing, that little yellow, those yellow candles? So we may be getting a counter trend. Is counter trend on here? Yeah. So I'm going to take this. Let's see what happens. Well, I'm going to start with 1, right? I'm going to start with 1, the early signal. Now, what I'm showing you here, you should not do. You should not take a long on an early warning signal. All right, I'm just doing it just to show you, because if I get the second signal, the real one, then I'm going to take the second lot, right? That's how I can add. This may just collapse and I'm long 1, but I'm only long 1, so I can just blow it out. All right, whatever. But if I manage to buy 2 because we get a signal, now there we go. I'm by the signal. Okay, now I have the second one. Now I have 2. If I win, I'm going to win more than I would have been losing because I only had 1 on the warning. Now, that's not how you trade the warning. The warning really is just to give you the heads up that this signal may be coming. And you realize on a 1-minute chart, that warning means a signal may be showing up in the next few minutes. If you have a warning on an hourly chart, that signal may be showing up in the next few hours. Okay, understand that. Okay, now, all right, so let's see what's going on here with this. Not working yet. Understand too, I'm doing this at a really bad time of day. This is not a good time to be looking for day trades. Okay, 4 o'clock in the afternoon when the stock market's closed. Usually markets are very erratic at this time. This isn't going to work. Well, let's see. If it goes to the stop, I blow it out. I mean, how much is this, by the way? Because again, this is a 15-second chart. How much is this stop? 71, 694, 662. It's 30 points. It's a 30-point stop on Bitcoin. I mean, is that a horrible stop? 30 points? It's annoying. But all right, I blow it out. I lose 30 points. Okay, here we go. I'm going to blow it out. Out. Still have 1 out. Okay. So I lose 30 points. Like I said, this is not the time of day to be doing this. I took that trade on the warning. It tried to go, it turned right around, wrong way. You see that? See how that works? I'm just doing this to show you, to just demonstrate the script, but these are not quality trades. Let me go to it. I just want to see if I can get a winner. Let's see what we have here. 30 seconds. This hasn't been stopped out yet. I'm not doing anything with this. We're just going to watch it. Now, if we get the second warning, if this thing turns into another warning and it doesn't stop out, I'll try this again. Because again, I'm just doing this to show you. All right, just be clear on that. You're not going to use it like the way I'm showing you here. You're going to be using this on a 1 minute. You're going to be much more patient. You're not going to just jump into all these trades. I just like using this thing. It's fun. Let's see what happens here. So I got a little, so this warning means in the next maybe minute or so, I may be getting another signal. Now, if it sticks, if that's the case, and this sticks, when you get warnings that are close to each other like that, that's a failed low. Okay. And a failed low, if that sticks, if we get the failed low, those are typically high probability. Now, how far it goes, I don't know. It'd be nice if it popped up there like that. All right, I'm going to try one. even though this actually is very close to the stop. I got one here, and I'll take another one if we go through the blue line, which, this is supposed to be an active trade because, the trade was called over here. You see that? You guys following me? There's the jump. You see how it jumped? The trade jumped. The original stop was like over here, and the whole thing jumped. It repainted. And it repainted because a new signal popped up. That's a failed low. So typically, failed lows like that, typically they squeeze. But like I said, this is a bad time of day. So, and these are counter trend trades. Realize I'm taking low probability trades, and you can see the result. These are not high probability generally because I'm taking counter trend, and this thing just refuses to go. And look, these are very tight stops. I mean, I'm on a 30-second chart here. These are very tight stops. Let's just see how this one plays. If this stops out, we'll just call it a day. It's just be nice to see this thing, do like a pop and run a bit. I just want to show you how cool that looks. So anyway, any other questions? Let's see. I wouldn't recommend using huge leverage. Right. You don't use huge. No, that's correct. The leverage that you use has to be relative to your account. Okay. So like, for example, how much am I losing right here? Like $34 or whatever. So in the losing trades that I've had, I probably lost like maybe $50, $60, maybe $100, maybe in total $200, something like that in these trades. That's a lot of money for $1,000 account. That's 20% of the account. So that would not be appropriate. Okay. You'd have to make that appropriate, you'd have to have like a $10,000 account if you're playing with that kind of leverage. If you're doing this with a $1,000 account, you have to be a 1/10 the size, right? And these futures contracts may not give you that flexibility. I'm using this futures contract, right? So they're going to be highly leveraged. And I just, I'm not paying attention to that. I just want to show you the trade signals. But yeah, when it comes to reality, if you're playing with a $1,000 account or something below $5,000, you have to look at the percentage of loss or percentage of risk per trade. You should not be losing more than 2 to 3%. Now, of course, if it's a very small account, stopped out. All right. Out. Oh, look, that might be a fake out. When you have a small account, like $1,000, right, it's very easy to make 10%. It's only $100. Right? It's very easy to lose 10%. You lose $100. You say that's not a lot of money. Right, but proportional to the account, it is. You can't be risking 10% of your account and expect to actually get anywhere with that. Right? So you have to have a decent amount of money to play a game like this. I'd say at least $5,000 or something like that. And you got to be very cognizant of your type of leverage you're using. These futures, like these MEXC futures, may not be a good choice. Forex obviously may be a better choice because you can control your sizes. Forex is a lot more flexible. You could do micro lots, you could do nano lots, and you can keep your risk really nicely controlled with something like that. Does that make sense? Without leverage, you can make a profit. Well, it's going to be the same. Really, I mean, it's going to be the same as far as if you're not using leverage, for example, and we're buying one Bitcoin, right? And this thing goes up, 100 points, and I have one Bitcoin. I'm not using leverage. Then, I'm up $100, right? But I mean, you're going to throw around $70,000 to make $100. Like, it doesn't make sense either. You could do it. Maybe on a smaller coin, something like Ethereum, but some leverage is appropriate, some leverage, but you can't over leverage. Like, so for example, if you have like a $5,000 account or something like that, maybe you could use 2 times leverage, maybe 5 times leverage overall, just so you can put on 2 lots. I don't know what their margin requirements are, right? I don't know what they are for this. Each exchange may have like their own rules for that, but you have to look at the margin requirements and how they let you choose your leverage. Like Forex, for example, is fixed, whereas some of these exchanges, they let you adjust your leverage. Like this could be 100 times, or you could do 50 times, or you could do 10 times, and you have to adjust. So It's going to depend on where you trade from and how you adjust it. But that's something you need to be very aware of. Because if you mess up on that, if you take a highly leveraged position and it goes to the stop, you're wiping out half your account. Okay, that's you should be losing only, like I said, 2%, 3% maximum of your account per loss. Okay. The fees can be a factor too, right? You can't overtrade. If you're putting on 100 trades a day, you're gonna have a problem. Like I'm showing you examples. I'm showing you a very active chart. Again, don't be confused. This is not how you're really should be doing it. I'm showing you a 15-second or a 30-second chart. I want you to see signals. I want you to see the lines appear like that. I'm going to take that one. I just want you to see how it works. All right, this may stop. Look, before I even get into it, it turned. All right, let's see if that thing turns green again. I'll try it again if it turns green. I'm not in it yet. Let's see if I get the green candle. Yeah, if you're taking all these trades, sure, cost can be a problem. You should not be taking more than 3 trades a day, right? On this time frame, on a 30-second chart, there's going to be dozens of trades. You should be looking at no lower than a 1 minute, right? A 1 minute you may get like during a market session, maybe 3, maybe 4 trades throughout the entire session. Okay, and you shouldn't even be if your first one is a winner, you should probably just call it a day. Right. And again, you're not going to sit there for the whole session. You're just going to set up your notification. There we go. And you're going to walk away. Okay. I'm long too. Let's see if this sticks now. Okay. It just repainted the price. You see it repainted the entry price. Okay. So that's where I'm long from. Got my stop, got my take profit. Let's turn on the trailing stop. Oh, I'm still in counter trend mode. Okay. Now with the trailing stop on, and if this trade happens to break through this, then I will be able to ride some. And let's see. Well, that's what I want to show you guys, how that works. Okay. So you guys following so far? There's the trailing stop. Let's see how this thing goes. So for example, if you're using this on a 5-minute chart, okay, you may only get 3 signals the whole day. Something like that, that's probably a lot for a 5-minute chart. So again, you set up your notification, you go here, you set it up, and you say, okay, when this thing gives me a long, let me know. Or again, when this thing gives me a signal, let me know. And then you walk away and you go about your business, whatever you're doing. You don't stare, you don't sit in front of your computer. You get the signal on your phone, your tablet, whatever, you come back, okay, open up your platform, place the orders, and then you go back to sleep or whatever you're doing, okay? That's the whole convenience aspect to this. Rather than sitting here like I am and staring at this, don't do what I'm doing here. This is just for demonstration so you could see the orders in play. You don't want to sit here and stare at this thing and then take 10 trades. You don't want to do that. Now, I was playing with this thing yesterday. Like I said, I was playing it with Bitcoin, and I caught some very interesting trades that I otherwise never would have caught. And I was playing with these time frames. I was doing it on paper. It wasn't real. But like when I had a runner, that thing ran 8-1. Okay. I never make 8-1. I never catch trades like that. So I just said, I'm going to let it run like now, just let it run and see how far it goes. And Bitcoin had a move and it just kept going and it kept going and it kept going. And the trailing stop just went after it. And eventually it turned around and tapped out the trailing stop. And by that time I was like 8-1. That's not typical, but but the thing is you're opening up the potential, right? By having a tool like this, you open up that type of opportunity. Because if you happen to have a runner, these coins, as you see, when these things move, right? And Forex does this too. They don't pull back. Like they don't turn around really. They have a move and they just kind of continue. They just continue in a momentum market, right? When not at this time of day, but they typically continue. As opposed to something like NASDAQ or S&P, they're wild. They're all over the place, right? So I've been experimenting with this system. Like on the NASDAQ, it's a lot harder. The NASDAQ is a mess. It's hard to do this on like a 30-second chart or 15-second chart with the NASDAQ. It's possible, but it's harder. Okay, there's a lot more noise. These coins tend to be less noisy. Although we're looking at a lot of noise here, and these trades aren't working out. The NASDAQ is like 100 times worse than this. Okay. So like I said, markets are highly random. There's no way to know which way these things are going to go. I'm not using any opinions. I'm just letting the orders tell me what to do. I'm letting the system tell me what to do. And so far, it hasn't been producing anything good. We had a couple of green situations, but it doesn't go to the take profit, which means there's no momentum. Should I be surprised? No, look at the time of day. Time of day is key. I'm going to have to blow this out. They're just not following through. Okay. We touch the trailing stop. I'm getting out. My order is set to blow out 2. I'm going to blow out 2 of them. So it's not a full stop. We're going to touch it or what? It's hesitating. Maybe not. And these orders are very close to each other as well. Okay, like on a 5-minute chart, they're not going to be so close to each other. Or an hourly, or a 4-hour. I mean, you could put any time frame. You could put an odd time frame. You want to put like a 25-minute chart, you can. Can we adjust the lines a bit? All right, we're out. What do you mean? We feel it necessary to adjust a bit? Yeah. Kim, if you're talking about the reward risk ratio, yeah, oh, see, look, I've been set on 1-to-1. Like I can do 2-to-1, for example, and the lines will spread out more, right? Because I could change the ratio there. You see that? How I was doing that? We don't have any lines right now, but I could change the reward ratio. See that? So that's 2-to-1 right there. I can change that to whatever I want. I had it on 1-to-1. Man, this thing wasn't even reaching 1-to-1 on a 30-second chart. That sucks. That sucks. Can't even reach 1-to-1. You see that? I think that's what she means by the lines, the reward risk ratio. Uh-oh. No sugarcoating the lies. Pale, bald, and handsome. See, so he uses 2. Pale and bald is not exactly attractive. And then he puts handsome. So it makes me feel better about being pale and bald. But the weather is getting better, so I should be less pale. I don't know about the bald, though. I may have to buy some hair. All right, anyway. All right, so you guys have any questions? So I spent a lot of time here today, but I get excited with this thing because I like showing it. Tino from Mexico, mucho gusto, bienvenido. All right, I had another Spanish guy here earlier. I was talking some Spanish. You missed it. Okay, I was telling him I can say bad words. So, guys, any questions? There's no point in me continuing to take these trades. It's okay. You can watch the replay. I've been here long today. I usually cut this a lot sooner, but I wanted to show you again. I'm excited to show you the script. Like I said, it's called Trade Scanner Pro. It's going to be available soon. It's not available yet, but this is the full version. What you're seeing here is the full version. This is not a prototype. This is what we're going to show. This is what you're going to get when you subscribe to it. We are going to make some, we have updates planned, like I said, but the initial version, this is what you're getting. Move the lines to get a better resistance or better rotation profit or support. The lines are not support and resistance lines. Those lines are suggested orders. Let's see if I can get another trade. I'll take counter trend off. Oh, look. So this trend trade, just to give you an example with the lines, it's still open. Look at this. So it was called, man, how come I don't take the trend trade? See what I mean? I'm taking counter trend trades the whole time. Now look at this. It was called here, right? It was called here. This is interesting, Steen. Look at this. It went to the take profit. It came all the way back and touched the stop, and the trade is still open. And the trailing stop followed it all the way over here, which is about to get touched. But these lines right here are they're probably set at 2-to-1. Let me see if I change this to 1-to-1. Do they change? No, they don't. Yeah, they do change. Look at that. So you see, I'm changing the lines, but the lines are not support and resistance levels. Those are suggested orders. Okay. So you're not using that as support and resistance. Maybe in a suggestion channel. Well, there is a suggestion channel in the community. you can put the suggestions in there, or you can also send me an email, or you can go to the community chat. Steen is always in there. He sees all that stuff. You can also send Steen a private message. Okay, you guys, you see that? So Steen, can you explain this? How come it went to the stop, which means it should have went to the trailing stop at that point, but the trailing stop is here with it? How is that possible? Is it because I'm fooling around with like the order placement, right? That's 1-to-1 right now. If I do 3-to-1, it's going to spread the orders out. See, look at that, right? This is 3-to-1. You see how it's spread out? But I'm doing this after the fact, obviously. So it no longer takes the take profit and stop loss. Oh, but you see, Steen, here's the thing. If it touched the take profit like this, shouldn't the trailing stop have been like at least at the break-even point or something? Like it should have touched the trailing stop, I would think. And it hasn't. Like the trailing stop is still there following this thing. But people, just at least in theory, I mean, look, the trailing stop followed this thing the whole way from this, basically, from the blue line, and it's still obviously in play until it gets touched. Okay. So anyway, I mean, most of the testing that I've done with this thing worked out. Like I'm happy with this, and this is what people are going to get. But like I said, if you have other suggestions, let us know. And, on the next update, he can see what he can do. But we're always open to suggestions and to making this like the best tool for you. So just to sum things up, to wrap it up, you're using this to basically shape it to your own style, shaping it to your own routine, right? You want to be a day trader, you can use this. You want to be a swing trader, you can use this. You can set the notifications to let TradingView know when a signal goes off, so you don't have to sit here and stare at it like I am. You're also not going to be using it on a 30-second chart, right? Unless you become a more advanced trader. As you could see how every single trade I took pretty much stopped out here, right? I haven't caught any real nice winners. But it's not a good time of day. But I hope you guys can see the value to something like this and how it reduces it simplifies your decision-making process and makes this whole thing easier for you. So you don't have to really worry about the analysis. And most importantly, you're taking the same trade for the same reason every single time. It's based on price momentum. So either there's going to be momentum or there's not going to be momentum. If it follows through, great, you have yourself a trade. If it doesn't follow through, you have your risk defined. Okay, and the trailing stop helps to reduce that risk constantly. So no more guessing. And this works even better too if you use it in conjunction, maybe using support and resistance levels, maybe using some other kind of bigger picture stuff, right? And you can use this. That's why I set up counter trend mode, because for example, if you're at a major resistance, like I was talking with Bitcoin, and you're looking for aggressive shorts, a tool like this can come in helpful. You pull up the hourly chart, you wait for a short signal. Set the notification for TradingView, and then wait for the short signal to show up. Now you have yourself a nice, well thought out counter trend trade, which is very aggressive. Can we control the trailing stop ratio? No. That got topped out. No, you can't control that. That's got a particular formula. I mean, there are settings for it, but I think the settings that we have are set properly for this. Okay. It has to be this way. The trailing stop has to move relative to the price action. If you mess with that, then it kind of defeats the purpose of having it. Okay. It's moving relative to the price action. So you have to understand that. All right, you guys, I've been talking a long time here today because again, I get excited and I want to show this to you. I hope you found this useful. We will have this available soon. Okay. And once it's available, I'll give you a link and all that stuff, and you guys can try it out for yourself. There will be a free trial period, so you can try it out yourself. Okay. And see how it works for you. Active investors, my active investor members, we will automatically send you an invite. You'll get an invite for this. So you're going to be the first people that get to use this. Okay. And any feedback that you guys have will be very valuable. All right, you guys. So, let me just put this back onto the, that probably would have been a nice counter trend trade that's developing there. And then we're just going back to the daily chart. Okay. So anyway, you guys, so I'm going to leave you with that. If you have any questions, you know where to find us. Check out the links in the description. Make sure you press the like button, the subscribe button. Subscribe to me on Twitter and all that stuff. It's always helpful. And all that. Okay. And whatever you have to do on Rumble, do that too. Okay, you guys. So cool. Everyone, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.